Good evening, everyone. Welcome back. YouTube, LinkedIn, TikTok, Instagram. Let's get TikTok in here. Welcome back. Tonight we're going to be talking about the ABCs of financial literacy for cosmetic nurse practitioner entrepreneurs. We're going to continue our conversation from yesterday. Just letting everyone in the room. When you get here, let me know what city you're joining me from. Oh, hi. Come on in the room. Drop your city in the comments. We're going to start with story time real quick. And I want to share something with you that might be a little bit surprising. This question came up in the group chat. On average, how much is every aesthetic NP spending in their first year? What would you guess? I want to see your guesses in the comments. And I want to thank all 400 of you who came yesterday and put some hearts in the chat. Okay, so on average, the number is $100,000. This is on training courses, equipment, marketing, supplies, insurance. And these add up faster than the revenue comes in. And here's the thing, while everyone is teaching them how to inject and operate lasers, almost nobody is teaching us how to actually build wealth. And so after 15 years in healthcare and 5 years dedicated to collecting data on cosmetic nurse practitioner entrepreneurs, I identified 3 gaps. Most business training ignores advanced nursing practice. You see this even when you go to aesthetic conferences. Most dermatology education ignores skin of color. And most entrepreneurship coaching doesn't even understand nursing regulatory requirements. And so what I thought was a delay in getting started actually ended up being a blessing. And it changed my whole perception. Watching my peers struggle, that's what inspired me to build the Alliance of Cosmetic Nurse Practitioners. Because here's what we keep seeing in the data. You can be clinically excellent and still struggle financially. You can have a full schedule and still live paycheck to paycheck. You can be great at what you do and still have no exit strategy. And a lot of times you don't even know what I'm talking about when I talk about having a $1 million exit. And the reason isn't your lack of skill, it's lack of financial literacy. And so that's what we're covering tonight, the ABCs of money for cosmetic nurse practitioners. Because look, you all tell me you're so passionate about the skin, but a lot of you are getting into this because you think it's going to make you a lot of money. That's what you see all over social media. So let's talk about the money. The foundational principles that you need, whether you're employee, self-employed, business owner, or investor. Most of us start off as an employee. Even then, you can be building wealth. Certainly when you move into the self-employed quadrant, same thing applies. Hi, good evening. When you get here, let me know in the chat what city you're coming from. And then when you go to the other side of the quadrant, now you're a business owner, investor. You can finally start making money in your sleep. Drop a 1 in the comments if you're ready to get into these ABCs of financial literacy for cosmetic nurse practitioners. Hi, TikTok. Thanks for coming back. Okay, so we talk about health literacy all the time. I love making these parallels between what we do clinically and what we do in our business. So we all understand that if your patient doesn't understand their diagnosis, they're probably not going to follow your treatment plan, and they're not going to be able to make informed decisions about their care. We assess health literacy because we know that patients who don't understand their condition cannot manage it effectively, and we're going to keep seeing them over and over again with very little change. But let me ask you something. What about your financial literacy? We all know you can have all the money in the world and it literally will not matter if you don't have your health. Can you understand your business numbers? Can you follow a budget? Can you make informed decisions about your money? We understand the importance of that health literacy, but we fail to understand the importance of financial literacy. When it comes to financial literacy, type a 1 in the chat if you feel confident and type a 2 if you're still struggling. Hi, Kay, BioWest. Because here's the parallel. I want you to really see this. Health literacy is understanding your diagnosis. Financial literacy is understanding your money story. Health literacy is following a treatment plan. Financial literacy is following a budget. Health literacy, preventing disease. Financial literacy, we're preventing debt and burnout. Health literacy is advocating for yourself. And financial literacy, that's negotiating your worth. Health literacy, long-term wellness, and financial literacy, long-term wealth. That's when we start talking about generational wealth and, even more importantly, dynastic wealth. You can't treat a disease you don't understand, and you can't build wealth with money you don't understand. Share this live with your friends, all your other Cosmetic MP friends who need to understand the ABCs of money. So let's break down the essential financial literacy principles that you need to manage your personal and business finances at every level. And this is based on the book Cashflow Quadrant by Robert Kiyosaki. And so I'm going to keep this really practical, really simple. This is the stuff they should have taught us in nursing school, but they didn't. But before I get into the ABCs, I need to tell you about someone who changed my entire relationship with money. Her name is Tiffany Aliche. You might know her. If you've heard of the Budgetnista, put a 1 in the chat. She's a former teacher who built a financial education movement called Live Richer. But here's what most people don't know about her. She didn't just teach financial literacy, she literally changed the law. In 2019, she partnered with New Jersey Assemblywoman Angela McKnight to write and pass a bill, A1414, also known as the Budgetnista Law. This mandates that financial literacy education for all middle school students happens in the state of New Jersey. That means every kid in Jersey now learns about budgeting, saving, credit, debt, insurance, and investment before they even get to high school. She made financial education compulsory, not optional, because she understood something really important. If you don't learn financial literacy early, you'll make costly financial mistakes later in life. This is literally what's on the table right now as we talk about the change in status for graduate nursing education. This is literally the conversation that's happening right now. We didn't learn this in nursing school. You're not going to get it in NP school. Even if you get your doctorate, you're still not going to see it. And a lot of us don't learn this at home either. And so when we graduate, get our first paycheck, we had no idea what to do with our money. And Tiffany's frameworks, the one that we're going to talk about tonight, are the same ones that are now required for those middle schoolers in New Jersey. So if 12-year-olds are learning this, we certainly can. Type Budgetnista in the comments if you've ever heard of her, and type learning if this is new for you. Okay, let's get into it. So A is for assets and liabilities. An asset, it puts money in your pocket. A liability takes money out of your pocket. Really simple, right? But here's where it gets tricky. Most people, and we're raised like this, to think that our house is an asset. It's not. It's a liability, especially if it costs you money every month. Mortgage, taxes, insurance, maintenance, that's money out. And your laser, well, that depends. If it generates you more revenue than it costs to operate, it's an asset. If it sits unused while you make payments every month, or you don't have enough clients, or you have poor marketing or no sales skills, it's a liability. Your education, well, that $5,000 injectable course, if it helps you generate $50,000 in revenue, it's absolutely an asset. If you took that course, but you never used the skills, you didn't have a patient wait list, you didn't have a guaranteed job, and so you have more money going out than coming in, it's a liability. Employee thinking says, I need to buy this to have a business. We see this every single day in the group chat. Investor thinking says, does this generate more money than it costs? Type 1, if this is making sense. Type 2, if you need me to explain it again. So here's your action step. List everything that you own and ask yourself, does this put money in my pocket or take it out? That's the simple difference between assets and liabilities. Hey, Melanie, Brenda, Tay, I see you. Hi, Todd. Let us know where you're joining us from. Let's get into B. B is for budget. This is your personal and business budget. Budget is a plan for your money. It tells your dollars where to go instead of wondering where they went. And I know budgets sound boring, but you cannot build wealth if you don't know where your money is going. This is where Tiffany's framework comes in. She created this framework and it makes budgeting so simple. You can literally do this in a week. In all transparency, it took about 3 weeks because I was busy, right? I was working, I was going to school full time. So you can definitely get this done. And this is the framework that is being taught to those middle schoolers. She calls it the BUBC framework. So B, those are for bills. These are going to be your fixed expenses like your rent, insurance, and loan payments. UB are usage bills. These are variable expenses like utilities, gas, and groceries. C is cash or choice. This is what we call your discretionary spending, things like dining out, shopping, and entertainment. And here's your diagnosis. If most of your money goes to C, that discretionary stuff, you have a spending problem, my friends. If most of your money goes to B's and UB's, the bills, you have a revenue problem. Do you see the difference? This is what Tiffany teaches in her Live Richer movement, and it's brilliant because it's diagnostic. It tells you exactly what your problem is. And if you get her book, The 1 Week Budget, she has charts and tables in there. I actually bought the ebook so that I could see those charts and tables. Normally, I recommend audiobooks for those of you who have a full-time life, a full-time job, and you're building your business on the side. You're busy. And so audiobooks have been a huge lifesaver. But for books like this, where I want to see the actual content, I recommend the ebook. So you can actually do both. You can pull up the ebook on your Kindle app, and you can see that and take your own notes, create your own chart. And then you can use the Alexa app, that's the hack, and you can listen to the audio. So you kind of get 2 for 1. Unlike an audiobook where you might have the actual author doing the reading, so it might have a little bit more cadence and be a little bit more entertaining. When you use the Alexa app, it's just one simple like robotic voice, but you can get used to it, and it is kind of for the convenience. I do that one a lot. So for employees, you need to track your budget to know how much income you need. If you're self-employed, you need to track your business budget to know if you're actually profitable. For our business owners, you track both personal and business, and you want to keep these separate. For investors, your budget includes investment allocations. So your action step for this one is you're going to track every dollar for the next 30 days. This is a great time of year to do something like this too. Start the year fresh, feeling confident, and knowing where your money's going. You're going to take every dollar and categorize it in each of these categories that we talked about. Bills, usage bills, cash or choice, okay? Now C. C is for cash flow. It's the money coming in versus the money going out. And here's what most people don't understand. You can't be profitable on paper. You can be profitable on paper and still go broke if your cash flow timing is off. Let's get into an example. You ready for an example, Tay? Let me see in the chat where everybody's joining us from. So let's say you invoice your client $10,000 for a package, but they pay in 30 days. Meanwhile, your rent, your payroll, all your supplies, they're all due this week. You have profit on paper, but you have no cash in the bank. That's a problem. Cash flow versus profit. Profit is what you made after expenses on paper. Cash flow is what you actually spend in the bank. Type 1, if you've ever had this problem, and type 2, if your cash flow is solid. So let's look at the difference. If you're an employee and you work for someone else, your cash flow is likely very predictable. People consider this to be stable or security. You get a paycheck every 2 weeks. Now, if you're self-employed, your cash flow is variable. Some months it's up and some months it's down. We know in the group chat, it's been down since the summer for some people. Now, the other side of the quadrant, these are the people who make money in their sleep. So the business owners, they manage their cash flow cycles and build reserves. For the investors, they create passive cash flow streams. Now, your action step here, we want you to know your cash flow cycle. When do you have money coming in and when does that money go out? Let's move on to D. D is for debt. And there's good and bad debt. Let's talk about the difference. So good debt, it's going to generate income or appreciates in value, like a business loan for equipment that pays itself. Bad debt depreciates and generates no income. This is like credit card debt for personal expenses. This is one of the core topics in the New Jersey's financial literacy curriculum. And thanks to the Budgetnista law, middle schoolers are learning the difference between good debt and bad debt before they get their first credit card. We didn't get that education, but you're here and you're getting it right now. So let's look at some more examples. Good debt, if you have a business loan for a laser and that generates $5,000 a month in revenue, this is a good debt. A line of credit to cover cash flow gaps during slow season, good debt. Bad debt examples. You have a credit card debt from personal shopping. You're financing a car that depreciates faster than you can pay it off. Here's the rule. Only take on debt if the return on investment is higher than the interest rate. Type 1 if you have good debt, and type 2 if you have bad debt. Type 3 if you're debt free. And then we will give you some thumbs up for all of you who are debt free. Now, action step here, list all your debts and ask yourself, is this generating income or costing me money? Let's move on to E. E is for expenses. We have fixed and variable expenses. Fixed expenses, you guessed it, they stay the same every single month. This is like your rent, insurance, and your student loan payments. Variable expenses, these change every month. Supplies you might be purchasing, marketing that you're doing as we have the holiday coming up, and your utilities. And why does this matter? Because you need to know your break-even point. How much revenue do you need to just cover your expenses? Let's look at some examples. You ready for some examples, Tay and Jenny? Okay, so fixed expenses, let's say it's $5,000 a month. This is, let's see, so fixed expenses, $5,000 a month. This is gonna cover your rent, insurance, and your payroll. Your variable expenses are about $2,000 a month, your supplies and marketing. That gives you a total of $7,000 a month. So you need to generate at least $7,000 just to break even. Anything above that is gonna be your profit. If you're an employee, your employer covers all the business expenses. So this is something you're probably not even thinking of when you decide to go out on your own. When you're self-employed, you learn that you cover all the expenses. This is a big disconnect for why some employees don't understand why they don't get paid or compensated a certain way, because they don't understand the business side. Now, the business owner, they're tracking their expenses by category to identify any waste. Just like we do in our clinical practice. We don't want to waste. That's a big part of our continuing education. Now, if you're an investor, you minimize expenses to maximize your return. Type 1, if you know your break-even point, and type 2, if you need to calculate it. And so your action step for this one, you're going to calculate that break-even point. How much revenue do you need to cover your expenses? And I love this question because when we talk about setting goals, it's really important that you know what your goal is and why if you're going into business, why you're going into business, or how much money you need to earn. Because someone might only need an extra $25,000 a month so their kid can go to a great school, they can live in a certain neighborhood and have a nice vacation every year. Someone else might want a business that's $25 million. Totally different goals, totally different strategies, and both are totally fine. You just need to know what you want and why you want to get there, and then we can help you take the first step. Okay, F is for financial wholeness. This is Tiffany Aliche's signature framework. It's called the 10 components of financial wholeness. And here's what's powerful. She didn't just create a framework for budgeting. She created a framework for complete financial health. She understood that you can't have financial freedom with just one component. You need all 10 working together. And this is exactly what she advocated for when she helped write that Budgetnista law. She wanted kids to learn all 10 components, not just how to balance a checkbook, but how to build actual wealth. And that's what we want you to do at the Alliance, which is founded on the 9 principles of advanced practice nursing. It's not just patient care. You also need to understand your finances, media, law. We get into all of that in business, of course. So the 10 components are budgeting, savings, debt management, credit, personal and business, learning to earn. This is revenue diversification. You've heard me say this all the time. Investing, retirement and wealth building, insurance. This includes your malpractice, liability, disability, life insurance, your net worth tracking, your money team, CPAs, attorneys, CFOs, or chief financial officer, and then estate planning. You can't have financial freedom with just one of those components. Even you understand that you need all 10. So some examples. Let's say you're great at budgeting, but you have no savings. One emergency might wipe you out. Or you have savings, but no insurance. One lawsuit could destroy everything. Or you're investing, but you have no estate plan. Your family loses everything when you die. This is financial wholeness, and this is what Tiffany teaches. This is what those middle schoolers are getting every single day and what you're all getting tonight. And this is what we're going to go into deep in the money workshop next week. Type 1 through 10. Type a number 1 through 10. How many of these components do you have covered right now? Budgeting, savings, debt management, credit, learning to earn, that's revenue diversification, investing, insurance, net worth tracking, money team, or estate planning. How many of those do you have? And so your action step here, you're going to rate yourself and figure out where your gaps are. Let's go to G. This is gross versus net. Gross is your total revenue before any expenses. Net is what you keep after expenses. That's your profit. You can have high gross revenue and still be broke. Examples, let's say you have gross revenue of $200,000 and your expenses are $170,000. Your net profit would be $30,000. So yes, you made $200,000, but you only kept $30,000. That's a 15% profit margin. If you're an employee, you see gross salary, but net pay after taxes is actually what you take home. If you're self-employed, you see gross revenue, but net profit after your expenses, that's what you're going to keep. For business owners, you're tracking gross revenue and your net profit margin. If you're an investor, you're going to evaluate businesses by their net profit, not gross revenue. Type of 1, if you know your net profit margin. Type of 2, if you have no idea. And it's okay if you don't have an idea. I've always learned the most by asking questions and admitting when I need help. Hi, Mike. Thanks for joining us. H is for health. Your financial health and physical health are interconnected. If you work in healthcare, you know exactly what I'm talking about. We know burnout can destroy wealth. If you're working 60-hour weeks to make money, but spending it all on stress management, therapy, massage, takeout because you're too tired to cook, you're not building wealth, you're treading water. Financial health requires a sustainable workload, systems and automation, boundaries and a rest, and self-care that doesn't deplete your savings. Now, if you're prioritizing both of these, type a 1 in the comments. And if you're burnt out, type a 2. Thanks for the hearts, everyone. So your action step here, ask yourself, are you sacrificing your health to build wealth? That's not sustainable. And we can all improve in that department, myself included. Let's go to I for income streams. You know, we do not want you relying on one income source, not one employer, not one service line, not one retirement fund. One stream equals high risk. Multiple streams equal stability. We all witnessed this during the pandemic. And if you talk to a lot of people who are really successful, who have accumulated a lot of wealth, they'll tell you that the average number of streams of income is 7 for people who have accumulated a significant amount of wealth. Hi, Renee Vasquez. Okay, so this is the part of Tiffany's learning to earn component of her financial wholeness framework. She teaches that you should always be diversifying your income. So let's look at our examples. If you're an employee, this is where you can negotiate base salary plus commission plus bonus. I hope you're taking notes. If you're self-employed, you can look at patient services plus product sales plus workshops. If you're the business owner, you're going to look at patient services plus staff revenue plus licensing. If you're the investor, you're going to look at those dividends plus rental income plus equity appreciation. The rule, aim for 7. Type how many streams of income you currently have. Just type the number. Action step. Okay, how many income streams do you have and how can you add just one more? Just take one step at a time and make sure, and when I talk about diversifying your income stream, I'm not talking about getting multiple jobs. You have one job that pays you multiple different ways. Okay, let's move on to J for job. And we're almost done. So let's look at job versus business versus investment. A job means you trade your time for money. That's our employees and self-employed. They only get paid when they show up. A business means systems generate money without you. That's how you move into the business owner quadrant. An investment means your money makes money. It makes money when you're sleeping. Most cosmetic NP entrepreneurs think they have a business, but really they have a job. And how can you figure out which one you are? Well, ask yourself, can your business run for 30 days without you? If yes, you have a business. If no, you have a job. Type of 1, if you have a business. Type of 2, if you have a job. And that's okay. Most of us are going to start off doing all the things, wearing all the hats, but we don't want you to stay there. And that's why it's so important for you to identify your goal, because that which is not measured cannot be tracked. And you won't know when you've gotten there. And when you know the goal is to build a team and to work your way out of a job, that is the goal. Then you'll know when opportunities present themselves, and you'll know which opportunities you need to create and who you need to partner with to get to your goal faster. No such thing as self-made. No one makes it by themselves. So the key to success is finding other people you can go with. If you want to go fast, you go alone. And if you want to go far, you take people with you. Okay, K for knowledge. This is that continuous learning. We have all committed to continuous education. So you're already there. So financial literacy is not a one-time event. It's continuous learning. Tax laws change, business strategies evolve, investment opportunities are going to shift. The rule, invest in financial education every single year. Pick a time in the year that's really good for you in your calendar and just stick with it. Keep it simple. Read books, take courses, hire experts, hire professionals. Like we tell our patients to seek professional attention. It's literally the same thing. And, people always say they're so busy to read. And look, a lot of us start off wanting to hold a book in our hands. But when your life gets busy, it's not possible. That's why those audiobooks or podcasts, they all become so helpful. And when your hands are busy, your ears are free. When you're driving, cooking, cleaning, working out, walking the dog, I used to do it when I was charting at night. So many opportunities, and it adds up. At first, it's not going to feel like it adds up. Just like that $50 or $100 that you're taking from every check and putting in your brokerage account. Yeah, $50 is never going to make me rich. But when I continually do that, and I look back over 10 or 20 years, we see that it accumulates. We get that compound interest. It's the same with learning. If you do it regularly and you stay consistent and persistent, your knowledge will grow, just like your account will grow, your confidence will grow, and your decisions will improve. When we know better, we do better. So don't beat yourself up if you don't know anything. That's why you're here. That's why you're taking the time to learn, because you want to make better decisions. And when you make better decisions, the people in your life benefit from that. Thank you so much. You guys are doing better than last night. There's 700 of you guys there. Okay, and so this is what Tiffany fought so hard for, to get that financial literacy in schools. You can do this. You are in a position to change policy too. You don't always have to change things on the national level. Right there in your community is where you have your greatest superpower. She knew that if you don't learn it early, you spend your whole life playing catch up. We know that. We didn't get financial literacy in school, but we're getting it now. Type 1, if you're committed to learning, and type 2, if you're feeling overwhelmed. It can be overwhelming. And that's why I recommend just putting it on your calendar and taking it in a little bit at a time. But you have to be intentional about it. It's not going to come knocking on your door. So ask yourself, what's one financial skill you need to learn this year? That's the ABCs of financial literacy for cosmetic nurse practitioners. And every single one of these principles, they're rooted in Tiffany Aliche's work, the same work that's now being required for those middle schoolers. If 12-year-olds can learn this, you can learn it too. Now, here's what nobody tells you. Your lack of financial literacy isn't because you're not smart enough. It's because you inherited money trauma. Childhood taught you money is scarce. Nursing school taught us that money is unprofessional. We don't even talk about it. And our first job taught us to be grateful for any paycheck. This is a 100% fact. If you're in cosmetics or dermatology and you're just trying to get your foot in the door, you take these huge pay cuts. That's not financial literacy. That's financial conditioning. And conditioning will keep us stuck. Okay, and that's what Tiffany understood. That's why she didn't just teach budgeting. She addressed the emotional relationship that we have with our money. She calls it get good with money, not just be good with money, because it's not about perfection. It's about progress. And if you're an entrepreneur, you really need to internalize progress is always going to be better than perfection, because perfection doesn't even exist. Type conditioning if this is hitting home for you right now. Next week in the money workshop, we're going to take this on head on. This is the money workshop, financial literacy for cosmetic NPs using the cash flow quadrant. I'll be hosting that workshop on December 15th, 18th, and the 19th. 3 total sessions. Remember, we only learn 30% of what we hear. So you come back for all 3 sessions, you're going to be up to 90% by the end of the week. Your confidence is going to skyrocket. It's going to be the same content. You're going to pick one that works for you. We know our schedules are all over the place all the time. So if you can't catch the first one, you got 2 more opportunities. And as long as you register, you'll automatically get access to the replay. We're going to go much deeper than we did today with these ABCs. We're going to talk about where the money actually is in cosmetics and where it isn't. The 4 quadrants and how to move beyond them, what your journey can look like. Because some of you, you're in high school. Some of you just got accepted to nursing school. Some of you are waiting to get an acceptance letter from NP school, or you just graduated and you're waiting to pass boards. And so you are in a position where you're looking to plan out the next few months or the next few years. And you don't have to wait. You can start taking action today. This workshop is going to be coming from Tiffany's financial wholeness framework, the same framework that got passed by legislators. Like I said, middle schoolers are learning it, and you guys are learning it too, and you're doing a wonderful job. It's a free workshop. DM me if you want to get the link to the register. If you want to get the link to register, so we can finally talk about the money. I want to thank you all for being here. Let's see if there's any comments over here before we sign off. And I'll be back all week to talk about this. Hypercars Brazil. Hi, thanks for joining us. All right, everyone. Thanks. Have a good night.